Hey there, in this video I'm going to break down the top 5 best green exchange traded funds or ETFs for people that are interested in sustainable investing in renewable technology and clean energy. Plus I'm going to discuss a couple bonus sector specific green ETFs. Now if you don't actually know what a green ETF is, simply put it's an investment fund that only invests in companies that either produce clean energy or manufacture clean technologies. Given the growing trend towards sustainable investing, I thought I would make a video to show what some of the better options out there are. And the great thing about a lot of these green ETFs is that it allows you to choose an entire sector as opposed to picking and choosing individual stocks. And that's going to let you diversify, spread out your risk, and take the pressure off trying to actually choose winners and losers as opposed to just investing in clean energy and clean energy technology companies as a whole. So if you're concerned about the environmental impact of your investing decisions, then stick around, because to start I'm going to show you the top 5 overall green ETFs by size, and then I'm going to talk about some sector specific ones in solar, wind, and also nuclear energy. So let's start with number 5, which is going to be the Alps Clean Energy ETF. Now this one is a little bit on the smaller side. It's only got $1 billion under management, which granted is a lot, but as compared to some of the other ones, it is quite small. It's got an expense ratio of 0.55%, meaning that the ETF managers are taking that off the top as a management fee. Now this ETF is only in the North American markets. It invests in Canadian and American companies only. If we go to the holdings section on Yahoo Finance, you can see the diversification across the different sectors. And down here, you can see some of the larger holdings they have in terms of the individual ticker symbols. So there's a lot of solar companies in there. You've got Tesla in there, and they've also got a bunch of wind companies in there as well. The performance of this ETF year to date is not amazing, but if we look at the 1 year as well as the 5-year charts, you can see it has had pretty solid returns. Okay, next on the list is going to be the SPDR S&P 500 Fossil Fuel Reserves Free ETF, or ticker symbol SPYX. Now what this is it takes the S&P 500 index and removes all of the fossil fuel companies from it. So it's pretty cool, and it's a little bit different from some of the other green ETFs. With this, you're not necessarily only investing in clean tech or clean energy companies, but you're actively avoiding investing in some of the dirtier companies like ExxonMobil or any of the other oil producing companies. So if you want to have exposure to the broader US market with some of the largest companies in the world, but you don't want to invest in fossil fuel companies, then this ETF is a great option. They've got a super low management fee of 0.2%. They've got $1.15 billion under management. And if we look at the chart year to date, you can see it's doing incredibly well. If I zoom out to the 1 year and to the 5 year, it's a similar story. Number 3 on my list is Invesco Wilder Hill Clean Energy ETF, which goes by the ticker symbol PBW. This ETF has $2 billion under management and invests in over 70 companies. It also invests in foreign markets, so not just Canada and the US, or just the US like the first 2 options. If we look at the top 10 holdings of this ETF, which you can see accounts for only 19% of the total assets, as opposed to the ACES ETF, where the top 10 holdings accounted for 50%. But here we have a lot of solar companies, including this one, Jinko Solar, which is a Chinese company. That said, it has a comparatively high management fee of 0.7% per year. If we look at the performance of this ETF year to date, you can see it has been down. It's underperforming the overall index. If we look at it on a 1 year or a 5-year basis, it's still in the green. Moving to number 2 on the list, we've got the First Trust Nasdaq Clean Edge Energy Index Fund, or ticker symbol QCLN. This green ETF has 2.8 or almost $3 billion under management. It's got an expense ratio of 0.6%, and it's heavily invested in the EV or the electric vehicle space. It's also much less diversified than PBW. So if we look at the top 10 holdings, it accounts for 56% of the total assets, and the top 2 companies on the list are NIO and Tesla. Now looking at its performance, this ETF is also down year to date. NIO has not been having a very good year so far, and Tesla has been trading kind of flat since it ran up last year. If we zoom out to the 1 year or the 5-year chart, you can see it's looking very similar to the other 2 green ETFs that are focused exclusively on clean energy and clean tech. And number 1, the largest green ETF on the list here is going to be iShares Global Clean Energy ETF. which goes by the ticker symbol ICLN. Now this ETF has over $6 billion under management, so it's larger than basically all of the other ones combined. It's got an expense ratio of 0.46%, so pretty much smack dab in the middle of the other ones. And it's also one of the oldest funds that's investing in the sustainable movement. This one's been around since 2008 actually. This one's pretty well diversified globally. If we look at the top 10 holdings, you can see that this first company, Vestas Wind Systems, is actually a Danish wind company. And then you got a bunch of solar companies from the US, as well as of course other investments in emerging markets. This ETF is invested in about 80 individual stocks. Its top 10 holdings though do account for almost half of the total asset value. Looking at the performance of this ETF, you'll see a similar story. Year to date, not doing so well, but on the 1 year and on the 5 year, it has had pretty solid performance. Another important thing to mention is that the S&P 500 index minus the fossil fuel companies actually has by far the best dividend yield of all of these options. You can see here that it's at 1.14% per year, which isn't amazing if you're looking for dividend investing, but that's really not the point here. Regardless, compared to the other options, it's significantly higher. You can see that ACES is 0.53%. We've got PBW at 0.74, we've got QCLN at 0.14, so basically no dividend, and then we've got ICLN at 0.74% as well. So if we're going to assess these top 5 green ETFs, there's a couple of things to look at. First of all is the management fee for sure, because that's going to potentially eat into your profits. Then, of course, you have to account for the fact that some of them are more diversified than others, some are more heavily weighted towards a specific sector like solar or EVs, and some of them have more assets under management. Now, if you want to make a bet specifically on green tech or clean energy, then these 4 ETFs have a similar storyline and a similar value proposition, although they are slightly different in a few ways. That clean energy or clean tech sector has been underperforming the market as a whole this year, but if you have high conviction about this sector moving forward, then some of these ETFs could be a good play. On the other hand, you've got the S&P 500 index minus the fossil fuel companies, and this index has been doing incredibly well. It's performing pretty much on par with the S&P 500 index as a whole, but you can also sleep at night if you're actually concerned about the environmental impact of your investing decisions, because you know that you have not invested in any fossil fuel companies. So the right option is really dependent on what you're looking for. Are you actively looking to invest in the clean energy sector, or do you just want to make sure that you don't invest in any fossil fuel companies? Because those two different approaches will lead to different results for sure. With that said, let's dive a little deeper and talk about some sector-specific green ETFs. If you have a high conviction about, for instance, solar power, which this Invesco Solar ETF, or ticker symbol TAN, actually tracks. This is a massive ETF. It's got $3.57 billion under management, and its expense ratio is 0.69%. Every single company in the TAN basket is a solar company. So if you have high conviction about the solar energy sector moving forward, then this could be a good bet for you. These are the 10 largest holdings in the ETF, which count for just under 56% of the total asset value. And another thing to mention is that this ETF is also global. It's got Chinese and American companies in there, so it's not simply limited to North America or the US. The solar sector has not been having a great year, but you never know, and things might turn around. Next up is ticker symbol FAN, or the Wind Energy ETF. Very similar to TAN, the Solar Energy ETF, this only invests in companies that are in the wind sector or the wind industry. It's got a much better dividend yield of 1.05%. It's got a management fee of 0.61%, but this one is much smaller. It's only got $400 million under management. So obviously the wind sector, or at least this ETF, is not as popular. And the performance of this ETF over the last year or two is similar to the story of the other green ETFs, but it's not necessarily the case that solar and wind move in lockstep. You will see some divergences, and it really does depend on the industry. And the final sector-specific green ETF that I want to mention tracks the uranium or the nuclear energy industry. Now, there may be some debate about whether or not nuclear energy actually counts as clean tech or green tech, but for the purposes of casting the net wide and showing you all of the available options, I'm going to include it in this video. So this ETF, Global X Uranium, or ticker symbol URA, has $736 million under management. It's got an expense ratio of 0.69%, and it's got a dividend yield of 0.6%. If we go to the holdings, you'll see that it's not really diversified. The top 10 holdings account for over 70% of the total asset value of the fund, and it's also heavily focused on the uranium mining sector, specifically in Canada. It's not exclusively about the uranium mining sector in Canada, but it is pretty heavily weighted towards that. Now, if you look at the performance of this ETF year to date, you see actually a different story from some of the other green ETFs. This is actually doing quite well, and you can see actually in the last couple of weeks, it's really shot up significantly. If we look at this over a 1-year and a 5-year chart, we're also seeing pretty steady growth. So again, whether or not you want to invest in an ETF like this really depends on your level of conviction in the sector, as well as whether or not you're comfortable investing in uranium or nuclear energy, because I know for some people, they don't consider it to be renewable tech or renewable energy, and there are some issues around that for sure. If you watch the HBO miniseries Chernobyl, you may have some second thoughts about supporting this sector. So there you have it. Those are the top 5 best green ETFs if you want to do sustainable investing, as well as a few sector-specific green ETFs if you have higher conviction in any particular industry. I hope you enjoyed the video and found it useful, and if you're planning on going out and investing in any of these stocks, then I highly recommend doing more research, due diligence, as well as consulting an expert if you want to, because I'm not a financial advisor and this is just for entertainment or for educational purposes. Anyways, thanks so much for watching, and I'll see you in the next video.